Hello and good morning. It is Monday, December 6th. There are 19 days until Christmas. And so what do we need to know? I am Kenny Polcari, your host of the party, and here's what's happening between last week and now the start of a new week, right? It was a rough week last week for nearly everything, right? Cryptos coming under renewed pressure as the Fed considers even more hawkish news, and that took tech down as well and continues to take tech down this morning. Oil continues to rally as OPEC promises even to increase supply. So there's a disconnect there, but we'll talk about that in a minute. Omicron not turning out to be as dangerous as they want you to believe. Cases remain mild, and that is the key point. And what are we having for dinner? Well, as we know, I'm featuring my 7 fish dishes. So this is dish number 4. It's the Feta shrimp, and we'll get to that at the end of the video. Okay, it was a tough week last week, right? First, we got hit with so many conflicting headlines concerning Omicron. Was it going to be the death knell that the mainstream media was making it out to be or not? The doctor from South Africa telling everyone not to worry, while Anthony Fauci said he wasn't so sure. And then we had Moderna CEO saying, no, wait, not so quick. We might need a whole new vaccine. Slow down. Let's think about this. As his mind was racing over how to profit from another panic attack. And as of this morning, the variant has now shown up in more than 40 countries. No one has died from it, and hospitals are not overrun with patients. And that's a key point that I think is getting missed in the conversation. So last week, stocks got beaten up. High growth names got slaughtered. While the NASDAQ is off 8% in 2 weeks, individual names are off double and even triple that rate, putting them all in bear market territory. We saw DocuSign on Friday down a stunning 40%. Kathy Woods' ARK Innovation ETF, which is all about disruptive tech, is now off 27% for the year, while names in that fund are down even more. Teladoc down 54%, Zoom down 50%, Roku down 40%, Coinbase 32%, Twilio down 29%, Shopify down 27%. It's only Tesla, which is still up 47%, that's saving her from being burned at the stake. Cryptos, which have been under undue pressure of late, also got smashed on Friday and then again over the weekend. Bitcoin falling to a weekend low of 42,000, down from 57,000. Ethereum traded down to 3,600, and a slew of others followed suit, falling 15%, 25%, even 40% as investors and traders got their clocks cleaned. The thought of higher returns, think of more hawkish Fed, makes speculative assets less attractive across the board. Recall how Bitcoin reacted back in 2017-18 when the Fed was raising rates. It collapsed in what was known as the crypto winter. And with rates now on the verge of rising again, rumor is that it's going to be a crypto ice age. Now, I said it was a rumor, so don't get your panties in a bunch just yet. But you have to understand the connection. Janet Yellen last week, Treasury Secretary, telling Congress and us that a failure to raise the debt ceiling would eviscerate the economy. A word that I thought was completely inappropriate, but what the hell do I know? I'm not Treasury Secretary. In any event, Congress did exactly what everybody knew they were going to do, and they raised the debt ceiling. So all that talk and chatter and inflammatory words were nothing but theatrics. Bonds got bought up, sending yields plunging, the 10-year plunging to 1.38% as money moved out of stocks and out of cryptos. OPEC kept its promise to raise output, bringing water supply to the global market, yet oil prices rose to end the week at 66.22 after trading as low as 62.43 midweek. The takeaway from that is that demand is not going to get destroyed. Omicron is not going to be the death knell that everyone wants you to believe it is. OPEC would not have raised output if they believed that demand destruction was on its way. And remember, they did qualify that increase by saying that they are watching demand closely. If the data suddenly shifts, then they will cut production to reflect that. So therefore, they're very much in control. Non-farm payroll report disappointed on the top line on Friday, yet unemployment fell to 4.2%. Average hourly earnings missed the estimate by 0.1%. Factory orders surged by a full 1 percentage point, while durable goods orders fell less than the estimate. The volatility index and the Fed were all over the place, causing investor angst on a daily basis. As of this morning, you have the following Fed officials. You got Bullard, Daly, Bostic, Mester, George, Quarles, and JJ all towing the latest line that the taper must happen faster. Period. The end. Inflation is much more of a concern than we all let on it to be as they try desperately to control the narrative and prevent a market sell-off. So I ask, how'd that work out? Now, it's clear that they misjudge it, and if they don't act fast, then we're in for trouble. In fact, they're so worried now that they sent Jimmy Bullard, who's the St. Louis Fed president, out to float the idea that the taper must happen simultaneously with interest rate hikes, which, if you remember, is something that Jay Powell specifically said would not be happening. So much for that narrative, and don't think that wasn't orchestrated. It absolutely was. That's how it all works, right? They got to change the path, so they send somebody out there to float the idea, and not Jay. This way, Jay can hide behind the fact and say it wasn't me. Stocks took it on the chin again, right? The Dow fell 60 points, the S&P fell 40, the Nasdaq gave back 300 points, and the Russell lost 47, all while the transports gained 18, which was a little bit of a disconnect considering all the negativity, but whatever. This morning, we're waking up to a weaker Asia. Tech was under the gun. Chinese property giant Evergrande being removed from the China Enterprise Index, just as it's making headlines again about potentially failing on the next bond payment. 3 hours ago, the Chinese government cut the reserve requirement that Chinese banks need to have on hand to help slow the sell-off and by offering some new stimulus, right? The weekend weakness in cryptos not helping the mood either. Alibaba drops 5.6% after news of a management change. And that now brings that stock's performance to down 56% year to date. Didi also announced that, in fact, it is moving its listing from the New York Stock Exchange to Hong Kong on pressure by Xi, which begs the question, why would you have anything China in your portfolio? Why would you allow Xi to determine your investment returns? There are so many other places to put your hard-earned investment dollars for international exposure. China, for me, is not one of them. Hong Kong ended the day down 1.8%, Japan down 0.4%, China down 0.2%, and Australia was up 0.5%. European markets have begun the week in the plus column. German industrial production plunging by nearly 7% month over month in October versus the expected decline of 0.5%. The Eurozone Sentex index is also due out this morning. And that offers a view of the 6-month economic outlook by investors and analysts for the whole of the Eurozone. A positive number is optimistic, while a negative number is considered pessimistic, or not so optimistic. Duh. Omicron is simmering on the back burner, and it's not sending the markets into a tailspin at all. As of 6:15 this morning, markets across the region are up between 0.5% to 0.9%. Dow futures this morning are up plus 170, but that's down from plus 230 at 5 o'clock this morning. S&Ps had gone negative but are now up 9 points. The Nasdaq has been lower all night and is off 115 points, while the Russell is up 15 points. Over the weekend, we learned more about what's on the Fed's mind. How fast to taper, how fast to initiate rate hikes, at what pace should the rate hikes happen versus what the market expects. Fed fund futures are now hinting at a May rate hike with 2 more penciled in for the summer of 22 and then the fall of 22, which would mean that the taper is most likely completed by March or the latest April. But beware, because none of this is carved in stone at all. It all remains very fluid, right? So just be careful. Omicron is now in 40 countries worldwide and at least 12 states in the United States. Massachusetts, New York, California, Minnesota, Missouri, Maryland, Georgia, Utah, Colorado, Hawaii, Nebraska, and Pennsylvania. And while cases are increasing, they have not been allocated to any deaths yet. Nor are hospitals being overrun with cases. New therapeutics and vaccines are certainly helping in this latest variant, and that is key to understanding, right? 10-year treasuries are trading down slightly, sending yields up. Oil's trading up to almost 3%. or $1.90 a barrel at 68.12. The VIX, which spiked higher last week, as high as 35, is a bit weaker this morning, and expect more cases of Omicron to be reported. Okay, great. We've got 3 weeks until the end of the year. Lots of uncertainty about tax policy, infrastructure spending, Fed moves, year-end planning, etc., etc. Recall that many were calling for a 10-year yield to approach 1.8%, myself included, plus or minus a little bit. My sense is that's not going to happen right now. That it can't happen, right? We might tease 1.6% again, but 1.8% seems like a big move in 3 weeks. And if that does happen, it is going to certainly cause stocks and cryptos to pull back fast and hard. And you can be sure that the administration and the Fed do not want that to happen. Or maybe they do. In the end, the turbulence that I and many of us have been talking about is here to stay for a while, and in my opinion, will only get worse in January. We're in the final stretch of this year, right? I think the market churns right here. It's hard for me to think that we could test new highs in the next 3 weeks when we all have this drama, when there's all this drama and uncertainty kind of surrounding the markets. Because in the end, it's the uncertainty that the markets don't like, right? It can deal with bad news. The market's okay with bad news. It's okay with good news. It can deal with the facts. What causes the angst is the uncertainty and speculation about the what ifs, which is exactly why we have these big daily swings, because it's all about the what ifs. What if the Fed? What if policy? What if tax policy? What if the Treasury doesn't, if the government doesn't raise the debt ceiling? What if Omicron kills everybody? Blah, blah, blah. The S&P closed at 45.38, taking it once again down and through the trend line. Now look for support at 44.90. The other indexes, which have all broken down as well, are trying to find stability. Will they be able to hold on, or are investors going to sell into any strong rally that may result? We're about to find out, right? And this is no time for anybody to fall asleep. I'm still in the camp that this new variant is not going to prove to be the disaster that they want you to think it is. Nor do I think the next variant will be either. I'm operating under the assumption that this too shall pass, and now that the Fed has really shown its true colors, you're going to need to be ready for more volatility in the weeks ahead. I think it comes in January versus December, but in any event, it is coming. So just, you have to understand that, and then prepare yourself accordingly, right? Put your shopping list together. Get more defensive maybe, or maybe not. Depends on who you are in the life cycle, where you are on the risk scale. Remember, you can text the word invest at 21,000 on your cell phone to get my digital business card delivered right to your phone. Feel free to download it, send it to me in an email, send me an email or a text message. I'm always happy to engage to talk markets, planning, thoughts, concerns, any ideas. You know, you can follow me on Twitter and TikTok at Kenny Polcari is my handle, and on Instagram at KennyP1961. So now we're back to the Feast of the Seven Fishes and the holiday season and what Italians do on Christmas Eve, and it's all about the fish. I've given you 3 recipes so far. Today is the 4th recipe, and it's Feta shrimp. Oh my God, this is so delicious. And it's not really that difficult to make, right? It's you can serve this several ways. You can either put it in a large bowl with toasted garlic bread. You can put it over pasta. You might like it over white rice. You might just eat it plain, right? Just the Feta shrimp with the garlic bread. I like to use orecchietti pasta if I'm going to put it over pasta, because then you can eat it with a spoon. It's really so great. So for this, you're going to need 2 pounds of large, cleaned and deveined shrimp. You want sliced garlic, you need a lot of that. You need thin sliced plum tomatoes, feta cheese, butter, salt and pepper, olive oil, and Madeira wine, right? You can prepare all this ahead of time and place it in bowls to have it ready for you when you're ready to cook. The thing about this dish is you have to make it and serve it right away, right? So you're going to begin by heating up a half a stick of butter and some olive oil on medium-high heat into a big, deep frying pan, right? You're going to add a handful of sliced garlic, saute it for 4 minutes or so. You don't want it to burn. Turn the heat up and now add the shrimp. Now remember, as you add the shrimp, it's going to suck the heat out of the pan. So you want the pan to be nice and hot. So put enough shrimp on there to cover the pan and let them cook. You know, when they turn pink, flip them over and they'll turn pink again. But once you flip them over, this is when you want to add the Madeira wine to bathe the shrimp. Don't drown them, just bathe them, right? Keep the heat on high. Season it with salt and pepper. Now take the sliced plum tomatoes and lay a slice of a layer of plum tomatoes on top of all the shrimp, and take the crumbled feta cheese and crumble it all on top. Cover it with a top, and so the steam allows the tomatoes and the cheese to soften and melt. No more than 3 minutes though, right? Remove it, put it in a large serving bowl. Repeat the process until you've cooked all the shrimp. When serving, make sure you have enough garlic bread to eat with this with your guests. Now, if you're going to put this over pasta, then you're going to boil the pasta. You're going to strain it. I use orecchietti. It's a small little ear pasta, right? That's what orecchietti means. So you can eat it with a spoon. You're going to boil the pasta. You're going to strain it. You're going to save a mugful of the pasta water. You're going to put the pasta back in the pot. You're going to take all the shrimp along with the sauce, the Madeira wine, and the cheese, and put it right in with the pasta. Mix it. You can always add a little bit more feta cheese with this. You're not going to use Parmigiano or Romano cheese on this because you got the feta cheese. Mix it. Serve it in a bowl right away with the orecchietti pasta. Oh my God, it is so delicious. In any event, the day is getting started. It's kind of a lousy rainy day here in New York. Let's see if it's a lousy rainy day for the markets. Until tomorrow, take good care.